Hey traders, this is Ron Haidt at Market Tamer. Happy hump day, happy Wednesday. Hope you had a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues shall always be addressed with your financial advisor. We'll kick off here with the daily chart of the Dow, and if you look back here to the left, that's that January high, and we're back into this big trading range. Now, one interesting thing today is we came down and tagged or bounced off of the orange line, which is your 50-day SMA, simple moving average. It's also viewed as an institutional moving average. So we came down, hit it, and then rallied. So volume did pick up today. Yes, it was a down day of just over 0.5%, but we could also assume that buying came in to push it off that moving average. So it's not as bad as it looks from a volume perspective just because it was a red day. Now we take a look at the SPY. This is something I have a long-term bullish position in. Let's actually zoom in a little closer. It did close below the red line a little bit more. Today it was down 0.75%. Target is going to be that 50-day in orange, and that would still be fine if we get down there. If we break it, then we're going to be falling back into that old trading range, which is what the Dow's already in, and the target would be becoming the 200-day SMA. And if I just go back to the Dow here just for a second, if the 50-day is broken on the Dow, we go right back down to the 200-day. So same thing on both spiders and DIA. We take a look at the Qs. They finished down over 1% today, but again, off their lows, they're still holding well above the orange line. These guys are still looking fine as well. Now, Apple, ticker symbol AAPL, it was revealed that apparently Buffett bought more shares again, and the stock is doing really, really well. After the gap up, it's still doing its little bull flag dance. Today it did close just over, what is it, 0.23% higher, new all-time closing highs, and we're just slowly starting to break out of this bull flag. Now, here's a stock that we talked about at the beginning of 2017, at the beginning of 2018, that this stock is just a Q1 rock star. Well, it's gone on a really big run since the beginning of the year, and now we're starting to put in lower highs. So this was the new all-time high back on July 25th. We rolled over, broke the 50-day. That tells you, hey, at that stage, that kind of violation and a pickup in volume, the trend is pretty much coming to an end in terms of it being easy, just nice higher highs, lower, higher lows. Now we've just put in a lower high and we rolled over. It doesn't mean the stock's going to zero or it can't go up, higher at some stage. But for right now, what I prefer doing on Adobe is also making it a trading range type of stock. And if I zoom in, I would say keep an eye on the lows from June. So right around 240, we get below there, then the bears start getting an upper hand on Adobe. So bullish run right now, I'd say, is a little over for ADBE. Macy's, nearly 16% today, massive move down, huge spike in volume. Target is going to be the 200-day moving average, down at 30. That's as much as another 15% lower. It took out the lows already from mid-July. Now you're talking about a gap fill, which also ties in with that 200-day SMA. WLL, which is Whiting Petroleum, we talked about this stock breaking out. Then I talked about the trading range, what to watch for. Today was a violation of the old trading range. It's certainly broken now. Target 200-day around 36, 10+%, almost 15% lower. Here is CREE, CREE. It was down on earnings 7.78%. Target's going to be the 200-day. Now, this stock, it could still do something like this. Just to give you some context, we're still in a rising channel. So even though, we're down 7.75%, spike in volume, the overall channel's still intact. So that's why I think we need to break the 200-day at 40. If that happens, we'd also take out this low here from the beginning of July, and that would then set a stage for a test at 37.50 and then down to 32.50. Now, last but not least, we're going to talk about emerging markets in Turkey. I had a question on this from the other day. Here's the EEM. We did gap, if I zoom in closer, we did gap down today, finished off the lows. Turkey also did a similar thing, but Turkey's actually been rallying the past 2 days. And that's on the heels of Qatar's investment of allegedly $15 billion. So that's probably going to prop up EEM and TUR right now. I would expect the bounce based on that news. There's no way to guarantee it. But watch and see how it reacts when we get up to the 20-day EMA around 25. So maybe there's still another 10% bounce in TUR before we hit resistance. In EEM, Now that we have our gap down, the bounce would be to a gap fill around 43, and then, up into the 20 and 50-day areas. So short term, I think bounce is likely based on what I'm seeing technically. However, if we violate the lows from today on a closing basis on EM or on TUR, if we take out the close from back on Monday, that would be a very bad sign. So maybe it looks like an oversold bounce. That is it. Have yourself a fantastic week. And tomorrow we're going to talk about, or on Sunday's video, we'll talk about NVIDIA and Walmart. Walmart's due to report tomorrow morning and NVIDIA after the bell tomorrow. Have a great day.